afternoon, everybody. Welcome to the Moving Markets Podcast. It's Thursday, October 9th, 2025. Stock market just closed about 5 minutes ago, so it's only the closing bell was just a very short time ago. Really quickly, let's take a peek at where we finished on the day. All three of the major indexes sold off today. The Dow, I believe, taking the biggest hit percentage-wise. But only 0.5%, not a horrible decline in the Dow. The Nasdaq was down quite a bit and almost got back to break even right in the closing minutes of the market. Nasdaq only finishing down 18.75, which is 0.08%, not quite 0.1%. And the S&P kind of splitting the difference on the two of them down between 1/4 and 1/3%. So again, not a horrible day. I was surprised by the sell-off today, because last night, a few hours after the stock market closed, maybe 4 hours or so after the stock market closed, we got the news that Israel and Hamas had agreed to a deal that Trump and his administration had brokered, a peace deal. I know when you're talking about an organization like Hamas, a terrorist organization like that, you are talking about you have to include in the conversation, will they uphold their part of the deal? Will they, keep their side of the bargain? But you got to love the hope that comes with this at the very least. I honestly thought that would be one of those geopolitical events that would spur the markets on a little bit. I don't think that deal had anything to do with the markets being down, but I'm just surprised it didn't create a more bullish effect on the market today. Just general optimism with things in the world tends to lead, not all the time, but it tends to lead in correlation to optimism within the stock market. So obviously today, other factors were at play. It's 2 out of 3 days that we're down a little bit, but look at how these 2 out of 3 down days. Number one, it has not really changed the 20-day moving average and the trajectory of it at all. Now, a few more days to the downside could. It would not be a horrible thing to see a little bit of a pullback in this market. In fact, I think a little bit of a pullback might bolster things going into earnings, to where small earnings misses or mixed earnings reports where maybe top line is good, bottom line not as good, outlook kind of neutral or not really changed from previous outlook. Companies can survive that and still continue a bullish run, especially if there has been a little bit of a pullback and there's a little more cash on the sidelines that people want to use once they see that a company is still in good shape, that the things they like about that company are still present. So I don't know that it would bother me if next week we saw this market pull back a little bit more and continue to sell off a little bit. I don't want a big dip. I don't want something like what happened in April. But a pullback like this one, where maybe you get 3 or 4 days in a row where it just comes back a few percent. Something like this. Of all the patterns on this particular chart right here, this is the one I like the most, because over about, let's see, if you go 1, 2, 3, 4, 5, 6, 7, you get 5 out of 7 days where it was down a little bit, not dramatically. 5 and 20-day moving averages got close to each other. RSI kind of got back down close to this 50 line right here. And then you had this nice run of a good month and a half or so that things just continued to the upside. I would like something like that. We'll see. We'll see if it comes or not. Every day you've got the possibility, we're not yet at the probability, but the possibility that some Democrats switch their stance and decide that they have held out long enough, and through some backdoor deals they might get the green light to shift their vote and reopen the government. I genuinely hope Republicans don't give in at all. I'd rather see the government shut down for the next year than to have the Republicans give a fraction of an inch, not even a minuscule bit of room to the Democrats. And the reason for that, obviously my politics are much more conservative, but what the Democrats are asking for is just ridiculous. And what they want is a fight they lost. They lost it on November 5th when Donald Trump was elected, when the Republicans kept control of the House, when the Republicans kept control of the Senate. They lost that fight at that point in time because the legislation that they want to change now was a result of the election results. So there's a midterm election next year. If they want to take the chance of staying, keeping this government shut down until next year, if they think that's going to help their chances of getting back into power in the House or the Senate or both, I say let them take the chance. I believe every rational, level-minded, every person who's able to think objectively and not be misguided with Trump derangement syndrome knows that it is the Democrats that are keeping the government closed. They have whined and cried and complained for a decade or more that when a clean resolution needs to be passed, that's what you do instead of shutting down the government. And now they're on the opposite side of that, whining and crying that they're not getting their way on legislation that was really decided at the ballot box. So I honestly, I know there's a ripple effect that would take place if there's a long-term shutdown. I know that it could cause some havoc and some chaos in the economy. But right now, I think public sentiment is firmly on the side of the Republican Party and the president, and it's the Dems that need to change. So barring that happening in the next few trading days, I think a continued sell-off is possible and maybe even probable. But until we start getting some economic reports coming back out and actually being reported on, until some of these government agencies open back up, there might not be a lot more that will actually move the markets. There could be other geopolitical things on any given day that could move things, but I don't see a high likelihood of that happening. In spite of the overall sell-off in the indexes today, two of our three open trades on the spread trade side, Palantir and Nvidia, they were both up in the midst of everything else being down, or a lot of other things being down. Nvidia was up. Nvidia, I believe, touched some all-time highs, finishing at 192.50. I believe that's an all-time high. I think they touched some all-time highs earlier in the day, but I believe that's still an all-time high finish for Nvidia. Impressive day that they had there. And Palantir spent a lot of the early part of the day in negative territory, and then managed to, here's your one-day chart. Something happened with about an hour left to trade, and Palantir got on a roll, peaked out up there at 187.50, came back down a little bit from that, but still finished up 1%. So two of our only three open spread trades were just absolutely phenomenal. Not so much on the diamond trade that we have on, but it's a longer term trade. I'm okay with that. But look at what this did for our year-to-date results. And again, I know a huge amount of that is the Palantir trade that we did at the end of last year, the Nvidia trade that is still open. It's been a long-term trade. We don't do a ton of long-term trades on the spread trade side of things. And then even this more recent Palantir trade is up over 30%. Just an absolutely phenomenal trade. So I did this the other day. I'll do it again just to demonstrate. If we took out these two trades, the Palantir and the Nvidia trade, we're still up 125%. That's nothing to balk at. That's still a phenomenal, fantastic year to date. But those are two other trades have made us just fantastically profitable this year. Collar trades are all looking good. They're all set now. Triple play. Hopefully you were watching Discord this morning. We rolled MicroStrategies out. It looks ugly right now, but I want to show you this chart on MicroStrategy because I do think, I keep forgetting to call them by their new name, Strategy Inc. The ticker symbol throws me. They came right down to their strongest level of support, and now I'm just kind of hoping and praying that they hold that. If they do not, if they're not moving up tomorrow, we're going to flip this thing into a bear call spread. We got it rolled out to next week already. We'll flip it to a bear call spread and get a good portion of what we're down, we will get back. But we're going to have to be kind of aggressive in a bear put spread, or excuse me, a bear call spread. We'll flip it to a bear call spread. But our other trades are looking good. JP Morgan was actually gaining a little bit today. Nike, we made an adjustment on. I don't have that in here yet, but we're going to be fine on Nike, even though it looks a little ugly, looks a little down right now. And then our Palantir trade certainly looks like it's going to finish. I take the profit you have on Palantir in the morning and jump out. You're going to be easily at the 15-20% mark on Palantir. It'd be smart to get out of that one. So that's all I have for today. Normally on a Friday, I would do a podcast towards the end of the trading day. I am going to be traveling up to Idaho for a family wedding over the weekend. I'll be on the road at the close of the market. So I will do a podcast to wrap up the week tomorrow morning, even though we won't know at the time I'm doing the podcast how the markets are going to finish. We'll talk about what's going on tomorrow morning, make sure we've done any other adjustments that we need to. And then that'll be kind of the wrap up for the week. All right. Have a great rest of your Thursday evening, everyone. Have a great day tomorrow. Thanks. Bye-bye.